Ask your question.
Can you hear me?
You can turn on your mic and ask question. Yeah, I can hear you, Stella.
Okay. So now, um, so sometimes when I do my top-down analysis and I move to the higher time frame, as you mentioned previously, you said we should be looking for external range liquidity and internal range liquidity, and price should be moving from the internal range liquidity to the external range liquidity. But then now the issue is that sometimes price doesn't respect like the fair value gap and it moves in the opposite direction. Now my question is um, is there a confluence, sorry, that you can provide like to further confirm the fair value gap?
Okay, so what you're trying to say is like, are they let's say particular fair value gaps that you can know like this fair value gap is going to hold and this one is not going to hold?
Yes.
If there was something like that, then no one is going to be using in trading. Because it could make trading very much easy if there was something like that. So, but we just know price moves from internal range liquidity to external range liquidity. You understand? So that was just like one of the ways like you can use to find your market bias or direction to take any entry. That was just one of the ways on the higher time frame. So first of all, it should be in accordance to the trend we get now. It should be like
Yes.
if you just say you're on a daily time frame like this, you should be able to check the trend of the market if it's on a downtrend or is in an uptrend. So if you're able to do that, then you now look for your internal range liquidities in that direction. It's going to save you money.
Mm-hmm.
Yeah. So
Yes.
another way again, because I told you guys whenever I have anything new, I always want to share with you guys. So there are so many ways
Yes.
you can use to have your daily bias, which we have like the sweeps of the previous swing positions or key levels. We have key levels. So what are key levels? Key levels are simply these are key levels. When we talk of key levels, we mean stuff like this. We have um we have there are types of key levels. Let's go through them. We have the A-shaped key level and we have the V-shaped key level.
I've wanted that number to call you.
It's a V-shaped key level. So here's a V-shaped key level. Then we have other key level. We have key levels like this. Please turn off your mic. Turn off your mic. So we have here's also a key level. Let's say um break and it comes back and goes up. This is a key level. This one. So this is an A-shaped key level. Here's a V-shaped key level. Here's an A-shaped key level. Once this A-shaped key level fails, it's going to turn into something like this. You understand? It's going to be like break of support and all those things, resistance and support and all those things. This is a break of resistance, then price turns to a support zone. Then this is also another type of key level. So these key levels is going to help you like on a higher time frames. Then let's say this 1 year, price was also come back and respect this key level, but it failed. So it's going to turn into and become something like a breaker block. So those are key levels. Then we also have open close key levels. So I'll show you that one on the chart. So there are 6 types of key levels. We have the A shape, V shape, and we have the breaker block type of key level. And we also have the breaker block types of key levels, and we also have the open close key levels. These are open close key levels like this here. When the candle closes and another candle open, it has an open close key level. So now how do we spot these A shape and V shape key levels? Let's say for example here, you just need to turn on your line chart for it to make it more easier. So you just want to see, yes, here is an example of a V shape key level. So you mark it out. There's an limit on this magnetic tool. So here's an example of a V-shaped key level. You can mark it out like this. So what are you expecting? You're expecting price to come and tap into this V-shaped key level and reject. So key levels are points like turning points in the market where price is always going to react to. Okay, so here this is a V-shaped key level, sorry. So we expect price to come, tap into this key level and buy off. So once it buy off, what is going to happen again? Your price is going to come again to this key level, do the same thing. So now, first thing you have to be able to spot your key level. Let's do it practically. Turn this off. Let's do it practically. So let's say um oh, let's take this man off. Let's say, for example, we have an A-shaped key level. Here's an A-shaped key level. What do you want to do next? You want to mark this key level. You want to mark this high. This is your key level zone. So what are we expecting price to do? We're expecting price to come, tap into this key level, and reverse down to the downside. So what are we expecting to see? We're expecting to see something, a candle still on the same time frame, right? We're expecting to see a candle should come, tap into this key level like this with a wick. Oh, sorry. I don't know what's wrong. Okay, yeah. You tap into this key level with a wick like this. Or like you tap into the key level with a wick like this and close below the key level. You get it should close below the key level. So let's say if we're on the daily time frame or on the weekly time frame, price closes below this key level like this here. We know that price is about to start to our bias is about to turn bearish, but we don't just confirm like that. You want to go now on the next lower time frame. This, if you're on the daily time frame or weekly time frame, take note. This is what you want to see. Price should tap into a key level and close below that key level, like the candles to close below that key level. And what do you want to see now? If you're on a daily, go on a 4 hours. If you're on a weekly, go on a daily time frame. So just go one time frame lower. Don't use the eight hours. No, if you're on a daily, go on a 4 hours. That's one step lower. So what are you going to see in this zone here? You're going to see price is going to come. Let's say price is going to give you something like this, a sweep and a break of structure to the downside. This is what you want to see on the next lower time frame lower. You want to see a sweep here. Yes, a sweep. You want to see this sweep here. And you want to see a break of structure to the downside like this. So once you have seen a break of structure downside, your trend is already confirmed that price is already bearish. You start looking for sell positions. So let's take an example. So here is a V-shaped key level on the daily time frame here on 24 hours. Here's a V-shaped key level. What happened? Price came. For you to know if price came and tap in, once you just need the line chart to mark out your key level. So once it has been marked, you want to switch back to your candlestick. You see what happened here? Price came, tapped into this key level. Yeah, tap into the key level and close above the key level. You get it close above the key level. So what happened? You want to just switch to the one time frame lower, and you see either you want to see something like a sweep. So here we had this something like a sweep here. We can call this a sweep and a break of structure. You want to see a sweep and a break of structure to the upside. So here's a break of structure to the upside. Another break of structure again here to the upside. So you want to see a break of structure upside. Yeah, price came up to this point. That's really giving you bullish. Wow, it's already telling us we are bullish. So what they're expecting, you're expecting for price to retrace and come down here to look for your entry. So how did I find this entry? I think I went again, I turned on my line chart and I saw another key level here. This was another V-shaped key level here, which I marked out. After marking out this V-shaped key level, what happened? I had to turn back to my candlestick and I went down to lower time frame to like refine this place because on my candlestick chart I saw this guy could be used as liquidity, and this V-shaped key level could be very 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 valid because it's a break of structure and this candle could be used as liquidity. So I had to now go to, let's say, 15-minute time frame to refine my entry. So here I saw that there was a very nice entry. It came and what is sweep, break of structure to the upside, liquidity, and what happened? Price needs to just come down, sweep, liquidity tap here, and add my trade, successful trade. So is very very easy. So yeah, even on this one here on GBP USD, let's check the weekly or daily. Let's check daily. Daily. Okay, daily. Price tap into this. This, yes, on the line chart. So yeah, we have this was like a breakup block key level because price this was a V-shaped key level which failed. This was a V-shaped key level which price can break down. So what happened? We expect price to come back up into this point and tap into this key level here and sell off. So that's what I was waiting for. So on this daily time frame, here is on a candlestick chart. Yes, on the candlestick chart, we had price retrace into this zone. This on a daily time frame, take note. So I had to switch now to the 4 hours. So what am I waiting to see on the 4 hours? I want price. Let me turn on my line chart. I want price to break this low. You get now. I just want price to break this low to the downside. If price successfully breaks this low to the downside, what am I looking for? I'm looking for sell opportunities only. Once price break this low, this is what I want. I just want price to come down, something like this. I want price to leave here. Turn this guy off. I want price to leave here, break this guy, and what happens? I start looking for sell opportunities, reversals to this downside. So that's just how I look for my entry. So if I turn it on here, you see price is still bullish. I just want a break of structure. Sweep. Yes, so it's like it's forming something like a sweep here, and I want a break of structure. So if it doesn't, I'm not going to take the trade on a higher time frame. I'm not going to take any trade. So I'll just wait. I'll be patient. Start looking for setups on the 15 minutes. Yeah. So let's go again on back to the daily. Let's check Euro USD. I also have a trade there. Euro USD. I have a trade here, which is actually going. So this trade, I think, let me see weekly time frame, daily time frame. So I think there was a key level here. Let's turn on our line chart. Here was a key level, a an A-shaped key level. So if you draw a line here to this right side, let's turn back our line, our candlestick chart. So let me take this off, or no, I have a trade there. I'm waiting for it to trigger. In fact, let's just take it off everything. Let's start from afresh. Let's explain how I got my entry there. So what do I want to look for? I just need to come to the chart on the daily time frame or weekly time frame. I want to look at where is price at the moment. Here's where price is. I want to look for any key level, any significant high. So for me to do that, I need to turn my line chart. So this is significant high, a very significant high here. So what happens to this high? Your here was a key level times magneton. Yes, a key level, an A-shaped key level. So I just draw a line on the A-shaped key level. So next, I turn on my candlestick chart. And what happened? Price came, tapped into the key level. Yes, the price came, tapped into this key level here and closed below the key level. So next, I just switch down to 4-hour time frame. And I want to see a break of structure to the downside. So I can still turn on my line chart so that I can see. So yes, here was a mini break of structure, but here is the main break of structure I'm waiting for. I want price to break this structure here, then I'm going to be sure what I'm doing. So yeah, but normally I caught the trade here because I had something here like a sweep protected high liquidity. I use this guy here as liquidity, and to catch, I took this sell from here and it's retracing slowly and going down. So let's see. I took another trade here. There was a sell I took on the 5-minute time frame here. So everything once price have already changed the trend and broken. I want this low here to be broken to the downside. Then I'm sure, pretty sure, our direction is bearish. Let's go back to this daily time frame. Turn back our line chart. Let me show you an example. This is another example here of something like a breaker. Here is a breaker key level. Support that tends to resistance. Here's an example here of this other type of key level I showed you. A V shape was violated, was broken, and came back to be retested. So here's an example of it. So all you need to do is you draw your line to mark out this V. That's your key level here. You turn on your line chart. And what happened? Price came back, tapped there and sold. Came, tapped, then sold. So to refine it, you just need to go to the next time frame, which is lower time frame. You want to see price. So let's go back to the daily. So on this daily time frame, price tapped into this key level and closed below it. You get. So what do you want to do? You want to just switch to the next time frame, which is 4-hour time frame. So again, sorry, I didn't say, you can also see an engulfing. If you see an engulfing candle, this engulfing candle also means something. It means wow, our trend is bearish. So after an engulfing candle, you can still start looking for your sell opportunities. But after this year, look at, let's turn on our line chart. You see there was a significant low. We wanted to break this low to the downside. Price break the low to the downside. So we need a small retracement to take a sell. So here was a retracement here. took a sell from here, from this open close key level. Here's an open close key level. Price came back to this open close key level and sold down. Then this guys here, we use it as liquidity to fuel liquidity so for a sell to this downside. So all you just need to do is just go to a lower time frame to find your entry. So we already know here is our entry point here. Here's our entry here for a sell opportunity. So you need to come again, you go above, you look for any breaker block or other block that is going to support your entry. You use everything here as liquidity. Tap to get sell trade from there, cash up to here. So that's just like a new way I found to get my entries. A new way I found to get my entries. Team USJPY. USJPY. The daily. Here was SNR. SNR trend line. Still the same stuff here. Same stuff. I think, let me see if I use the weekly or I use just daily. I think I use just daily. I use just daily. Uh, let's see. I use an open closed here. I use an open close. I use an open close. Oh, this one. Okay, yeah. Something like this. Let's take this off. This thing hasn't reached my TP yet. Let's take everything off here. Then I'm going to miss it. Okay. So here also I got this entry. Again, it's very, very basic. So this is what we got. We had something support down to resistance. We had a V-shaped key level which was violated, which didn't work out, and price came back to retest it and sold off. That's what happened here. So here I mark it with this and I drew it. Okay, so I'm just waiting for price to come tap here and it's going to sell down. So there's also something about trend line. So let's say this shift here haven't happened yet. So all you just need to come when you see two highs here, you can mark it like this with your touch as a trend line. So price is always going to come back and tap there. And to confirm your trend line, you're going to see bullish and you're going to always see bearish engulfing. I don't know. Yeah, there was not really a very good bearish engulfing, but the best trend line always have bearish engulfing. I'm going to emphasize on that on maybe the next Zoom call. I'll look for time and I'll create a video concerning how to confirm a trend line. But let's go back to what we're doing here. So without the trend line, even the trend line is just like an added confluence. It's not a confirmation, but an added confluence. So yeah, let's continue on. We have this our V-shaped key level, which turned into an A-shaped key level. Price came now there, tapped here, and we're expecting price for a sell. So you just need to turn on your candlestick stuffs. And now we have what we call refinement. So once you have already gotten this guy here, you can refine it by dropping down to the next lower time frame. You just need to you look for, or you can see once you drop to lower time frame, like let's say 4 hours, you turn on your line chart again and see anything again here that can still make you to like, as you can still expect price for and see you see have the same thing here. We have the same setup, the same stuff here, the same thing. We had it here again. So what you want to do is that's your 4 hour key level. So you can mark it out, your 4 hours key level. It's like a breaker block. So you can still maintain this one, or you can take it out even. So yes, yeah, this is what we call refinement because price is always going to come back to this guy to refine it for coming down. So you turn on your candlestick chart and this will be your trade setup. What you want to do is this guy is going to be used as liquidity. Mark it out, pull, and what happens? Price comes, tap there and sell off. So once you have gotten something like this already, price have already come into your key level zone and closed below. See, price came into our key level, it closed below. What do you want to do? You want to go, let's say, on a 1 hour time frame. You want to see a break of structure of any significant low. Here also significant low here. You should expect a break of structure. If you took a sell here, it's fine. But you wait for this break of structure here to start looking for confirmation for lower time frame entries to pick your sell setup. So you can go again now to the 5 minutes to start looking for sell because you already confirm your trend to be bearish. You already confirm your trend. Since from up here, even there are so many sell opportunities here. QM, here is a QMR trade someone could take. Here's a QMR trade someone could take. Here's another QMR trade someone could take for a sell bigger than your Google. Okay, here should be a breaker block. Liquidity, here is going to be liquidity. And I'm the famous like money and the winners. All right, this will be liquidity, and this man here is going to be breaker block. Breaker block. Okay, yeah, you have this sell. Sell. Let's see again what happened. What happened? What happened? What happened? I won't take that. Let's check. Let's check. Let's check. I won't take anything here. All right. Something came out, but it's not really clear. Let me take that. I'm like, okay, yeah, can use this guy here as liquidity. Use this guy here as liquidity and an order block entry here. Order block entry for a sell. Let's see, let's check. Nothing. News. Nothing. Yeah, something. Sweep. Something here. Going in a lower time frame. See this. Yeah, this is sweep. Protected low liquidity. Price comes stops here. Sell off. What again? Yeah. Let's see. I don't know, but you can look for other any sell conferences I've been showing you guys. Breaker block, other blocks, because you're already got in your trend. You understand? You already got in your trend. And let me show you guys some other setup, some other ways, other setups, like how will I say, other types of setups you can take as you can also find like I use it as a confirmation sometimes. It's good for confirmations. Um let's check BNX USDT perpetual contract BNX USDT. One perpetual contract on Bybit. All right. So let me see if I can see how that trade again. I think 15-minute time frame. Good, me, I promise. So we had the trade here. So I think it was something like an order block entry. There's an order block entry. Where's your liquidity? Let's say these are liquidity. Price came tapped here into our order block or breaker block, and we had to sell. We had to sell, but now there's another confirmation. I'll also do a video on this. After you've gotten price came, let's say price came into your POI and start going up down. You don't enter yet. Wait for a break of structure. Wait for a break of structure to the downside. That's like an added confirmation to your entries. Then here will be your liquidity, your inducement liquidity. So this is where you should enter. After price come again to your inducement, this is where you should enter. Okay, yes, we should enter for a sale. We target right to this low. Then make sure you my bank account. Okay. So yeah, gives you a more refined entry. Okay, so it's like a confirmation. So I will do a video on all of this stuff. So I've just been busy lately with school and some other stuff. So I'll do a video and I'll make sure everything is cleared and everybody's on the right track. Will try my best for everybody at the end of the day. We all should be on the right track. So I don't know if you have any questions, you can ask your questions. You can use the chat box, or you can turn on your mic and ask. Any question? When marking the A and V shape, do you only mark the opening and closure of candle? Yeah, yes, 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 yes. Very important. So now, let's go back here. When you're marking out your V shape and A shape, you mark the closing, like the closing, the closing of any candle, not the opening. It's mostly the closing of any candle of the candle that gives you the V shape. So let's say, okay, let's go on a daily time frame here. Okay. So here, look at, here is here is a closure, and here is an opening. So for you to have this, just turn on your line chart. It's going to make it more easier. On a line chart, wherever you see any V shape, sorry, wherever you see any V shape on the line chart, know that there's an opening, there's a closing and opening of a new candle. Here's an example. Let me turn on this magnet. Here's an example here. If I mark that out, turn on our candlestick, you're going to see that there was a closure. This candle closed here and you open. Forget about the wicks. You're not going, you won't include the wicks. You understand? So whenever there's a closure, just the closure. Forget about the opening, the closure. Even here, this one here, same thing. So even CRT works. Yeah, there was something like there was a CRT here. Even this reversal here has a CRT. And the CRT is very valid because it's at a key level. Yes, here's a key level. This a CRT also happened here. So this setup was a high probability setup. And the setup is not over. It's not over. Look, let's go on a 15-minute time frame again. This setup, this buy is going to keep on buying. So what I just need to look for, I need to see come again. I wait for any retracement, but the trade was very straight up. It just came up. But I will look for any more retracement and all more conferences to look for only buys till I get right up to this position. So any other question again? Hope that one is clear, Stella.
Yes.
All right. Any other question?
Yes. Like when you spot the A and V, like does it matter the trend on which you are spotting it?
No.
Like maybe on the bearish trend you can spot an A or a V.
Yeah, okay. So one thing, that's a good question. One thing about is about the trend. The trend doesn't actually matters. What matters, what you're going to see if the trend is bearish. If the trend is bearish, let's say spotted, let's say a V-shaped key level like this, and I'm waiting to, let's say, to price to come here and tap. You avoid unnecessary losses because you just want price to tap into this key level and close above the key level. You understand? And you want to now go on a lower time frame again. You wait again for price to like break structure. You wait again for price to like break structure before you enter. So if the trend is bearish, you see price is not going to respect it. Price is not going to close above the key level. Just going to come and break it. And whenever price breaks down like this, what do you expect as a wise trader? Expect now the opposite to come. Price will now come back and retest this key level. You get now. So you're not going to be losing any trade. Both ways, you're going to make profit. So if price comes, it doesn't respect your key level, just know it's going to break and come back to that point there. Let me turn on this line chart off. Let's see it together. The time is running out. No problem. Let's go on this currency stuff. Let's JPY. Example, yeah. Here was a good V-shaped key level. Like, let me mark this V-shaped key level. It was a good V-shaped key level. I could really wait for to enter to look for a buyer. But if I turn on my candlestick chart, look at this. What happened? Price came, made as if it's closing. Look at it closed above. Yeah, close above the key level. Let me zoom close above the key level. So let me mark this out with something. Right. Let's mark it here. So now I want to now go on a lower time frame, like 4 hours. So yeah, what happened in 4 hours? So why the reason why I want to see on the 4 hours, I want price to break this high. I want price to break this high before I go in for any stuff. The price didn't break the high, it still came here, continue. So me as a white trader, I could not enter any setup here until price had broken structure to the upside. If I was start looking for buy setups. Until price had broken structure to the upside, if I was start looking for buy setups. So price didn't break structure, price started reversing. Now, once we have seen that price is reversing already, it's already giving us what price is going to come back to this guy and sell off. So next again, we're going to discuss about open close key levels. Open close key levels also are very important. Price will always react to those stuffs. The open close key levels. Open close key levels are just these guys here. This open close, and we're going to discuss which one can be valid. Because me, I know good open close are the ones that has liquidity close to it. These are good open close key levels. These are good open close key levels. There are people who mostly trade just with open close key levels. Here's an open close key level here. Here's an open close key level. Yeah, until price went up, came back, tested it, and bought. Yeah, so we're going to do all those things. We're going to do all these things. With time to time, we're always going to launch all these Zoom classes. We're going to discuss anything. So any other question? Before time's run out,
Yes,
we have I think 6 minutes.
I think my last question. Like when you spot an A or a V shape, then when the candle closes above like the point where you marked your line. So now what is your target? Where do you anticipate price to reach before moving to the opposite direction?
Price will always move from key level to key level. I think this here answers our question. All right. So yeah, we already know yeah price tap into this key level and is buying up. You get and it's buying up. So now what are we expecting? We know price may likely here is an A-shaped key level here. We know price may buy up to this point and start reacting to sell down or price. And here is a V-shaped key level which failed. So price may reach up to the zones before trying to reverse. So those kind of zones should be your target. Again, so I should be buying to this kind of zones here before I can, because these are key levels which price may likely react to them. To these are key levels price may likely. So price may come and break it sometimes. If it comes and breaks, if it comes and taps here and gives me, let's say, close below, I know that it's going to come back again down. Okay, so here is also like a fair value gap. So price may tap there. And now here is also like an order block. So you just need to be very, 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 very vigilant. So you just need to be price move from key level to key level as it's moving from internal range liquidity to external range liquidity. So any other question? Hope that answers your question.
Yes.
Any other stuff again? You can ask any question. We still have I think 4 minutes. Any other question? But if it's fine, then I'll be really happy. So whenever I see key levels, you can send them to the group chat. I'll do my best to respond to all the messages there. So I think no question. So you all have a blessed trading week. Backtest. Whenever you're doing nothing, go on the charts. Try. Okay, the jump trade I posted. Yeah, the jump trade. We have 3 minutes. Let me try to be very, very quick about it. So now, this jump trade, what I did was on the daily time frame. On the daily time frame, let's take everything out again. I will be a little bit fast because it's about to expire. So on this daily time frame, I just had to come here, turn on my line chart, and first of all, price have been ranging at this low. But forget about that. We don't want to focus on that. So here was a key level, a valid key level. I marked out my key level. I marked out my key level, and I turned back to my candlestick chart, and I saw that price came, touched into this key level to the downside, and closed above the key level. So what do I do next? I just need to switch down to the next lower time frame, which is the 4 hour time frame. And I want to see, let's say, a break of structure to the upside. So to see this break of, you cannot really see here. You can turn on your line chart so you can see it. So here was a good, like, I need to see a sweep and a break of structure. That's what I was explaining before. So if you weren't active, then you can, I'll put the video posted. So here was a sweep, here's a sweep, and here was a break of structure to the upside. We all know swing structures and all those stuff. Here was the break of structure to the upside, and here was a second break of structure to the upside again here. So we can turn on our candlestick chart now. So we have all these break of structures to the upside, and I notice here, for just let's not just say that's an key level. So there was a real break of structure. So this price is going to come back down to this zone to buy off, because I've already confirmed my trend is bullish. I just expect price to come back here to buy. Again, you can use your Fibonacci to, let's put from this low. Let's see this low. Let's try this low. This high. Okay, this low to this high. Where's our golden zone? Here's our golden zone. Because we have a break of structure. Here's our golden zone. Again, now we just need to go now to a lower time frame, to a more stable time frame you may want to refine your trade from. I think I used 30-minute time frame. I think I used a 30-minute time frame. It's 30 minutes. What's wrong with my network? Yeah, I think it was 30 minutes. Yeah, 30 minutes. So now here's my golden zone. I'm expecting price to come to this golden zone and buy off. So what we have inside the golden zone, I had my liquidity formed, and again here I had my sweep to the downside, and now I use these guys here as my key levels, because I wasn't seeing any other block, any valid other block below here. So I just marked out this key level because I saw there's so many wicks here. So on lower time frame, let's say 5 minutes, there are going to be other blocks at this point. So I just saw this key level, and I marked out the key level. Let me take out this guy. So I marked out the key level from here, add my sweep, break of structures to the upside, liquidity, key level. What happened? Price goes up, comes, tap here. Here's my entry, tap here, and but now still look for more buy opportunities here to price reach to this top. So I think we're less than 1 minute. We're about to end the call. The video is going to be sent to the group, and have a nice day.